May profits be upon you. Welcome to another weekly Forex forecast. We're going to be looking at the indices. We're going to look at the S&P, the NASDAQ, and then the Dow. And let me tell you something. I don't usually trade the Dow, but this past week, I'm going to tell you what. I think the Dow is the best one to trade, and it might be the best one to trade next week. Let's take a look. All right. Now, first we're going to start out with the S&P. All right. We're looking at ES futures. That's the S&P futures, right? And what I want you to notice are a couple of things. All right. One is price. Oh, wow, what's going on with this mouse? It's like acting weird. Why is it all over the place? All right. I think I got it now. All right. So price makes this low and this high. All right. This is what I look for: the push higher, the low, and the higher high. Right, the higher low to the higher high, and I look for that break of structure. All right. After that break of structure, I'm looking for price to push back into this leg, this bullish leg, for a internal target, an internal liquidity target, like a bullish FVG, and we happen to have one. Right here. All right. And price pulled back into that bullish fair value gap. I said FEG, that bullish fair value gap, and found support. And price has been pushing all last week, pushing higher. It's been trying to go lower. Oh yeah, it's been trying to go lower there. All right, tried to go lower, but it kept grinding up. All right. So what am I looking at now? We're looking at a supportive fair value gap that held, and price. This is the internal liquidity target, and you know price likes to go from these external targets. We go inside for an internal target, but there was no internal target to get. There was an external target. These lows, we hit the opposing sell side liquidity target there, pushed higher, took out the external target here. And then after making that external move, we move back to the internal target, which is the bullish fair value gap here. And where are we going now? Right now, you can see what the price has encountered this bearish fair value gap. All right. I think price is going to disrespect it. Why? Because we're already past the consummate encroachment, or the 50% of this fair value gap, which usually means that it's going to fail. And we're already, you see how price closed right at the top of that fair value gap. So it's likely it's going to complete this failure, right? And this created the high of the week. When price opens now for next week, which will happen in about 15 minutes, you'll see we'll have no problem, likely taking out that high, taking out the high of last week. So this becomes our new target, the external target, from an internal liquidity move. Come on, man, what is this? Why are you doing that? From an internal liquidity move from here, price will reach the external liquidity target. Now, will it reach it? I can't determine that. It just makes sense after a bullish break of structure to the upside. You look for price to come back to a fair value gap, and then find its support so it could make a higher high. All right, so we can complete this high, higher low, higher high, higher low, higher high scenario. Got it? So this is the target for next week. Now let's look at the NASDAQ. NASDAQ is very similar, but a little different, and something we have to pay attention to. You can see that we have the same dynamic here. We hit these lows for an external target. All right, hit that high to take out that external target, so price could come back in for a internal target. And you see how deep price, I want you to pay attention to this. You see how deep price penetrated into this. This is a little different than the S&P, which went down to the consummate encroachment or the 50% of this of fair value gap, this bullish fair value gap. It's a little different. This one went past it, closed, right? But then recovered on the next candle. And although price tried to go lower, sweeping the low of that previous week. All right, we swept that low and pushed higher. Now look at where price is now. We have not met that bearish fair value gap yet. All right, do I think we're going to go through it? With the NASDAQ, because it's running a little weaker. This is what the S&P did. It's going to dismiss that bearish fair value gap. This one has yet to meet it. There is a chance that price may react to it for a small pullback. All right, and I think it's going to be a short-term pullback, right? And then we'll probably continue up higher towards that external target up there. Just comparing it to the S&P, we're already past that, and there is no bearish fair value gaps here, so the external target is pretty clear. On this one, we have to get through that headwind in the for that bearish fair value gap here, located at 2982. I'm looking for price to get past this and reach up to 21,100 rather, and beyond to the external target here. That's what I'm looking at for the NASDAQ. Now, if price should find its way to take out these lows and also to take out that low in the S&P with the NASDAQ, if we get a close below that low, then we're coming to these lows. Then that's what I'll be looking for. And I'll be looking for bearish fair value gaps for price to push down and then come up and use those bearish fair value gaps to push further. But that's not the likely scenario. The likely scenario is that we react to that fair value gap and then continue up higher. Okay, let's look at the Dow. Now, I just told you earlier that I thought the Dow was the best one to trade. Why? Because look at the price action. It's very clean. All right, price took out the high, made a higher high, came back a little bit. This was a nice little consolidation, and we pulled up higher. We pulled back, sweeping these lows for liquidity. All right, there was if you come all the way over here, you'll see there is a bullish fair value gap right inside of this area of fair value. All of this doesn't mean anything. That's old history now. But the deal is, we made that high, we pulled back for a low, and then we made a higher high, and then we're pulling back again. And look at the clear intention of price. It wants to go higher, and you see this these bearish fair value gaps. That bearish fair value gap, price just ate right through it. All right. So and as price came back into, retraced back into this bullish fair value gap, just like on the S&P and NASDAQ, it created a new fair value gap here. All right, which indicates support for higher prices. And you see how price was very strong. You see the momentum is very strong when it moved away from this bullish fair value gap. Is there a chance price is going to come back from up here down here to go higher? I think that's not as likely. I think we're just going to keep charging through. That's what I think. And from the price, when price opens between Monday and Tuesday, we're going to hit this high. we're going to hit that high. And I want to see if price creates more fair value gaps along the way. So that's what I'm looking at. All right. So we're bullish on all of the indices. And it's kind of weird because the US dollar, the Dixie, if I can get us to the Dixie real quick, will be traveling at the same path. It's been very strong. All right. Friday had a little retracement because of the news items and all, but it's been bullish while the S&P, the NASDAQ, and the Dow has been bullish. That's not usually the case. One is supposed to be going the other way from, going the opposite direction. But I think this may continue into next week. All right. So that's my story. I'm sticking to it. I hope you enjoyed the video. Smash the like button if you like the video, and hit the boost button if you would. It helps out with the growth of this channel. Okay. And I will see you in the next video. Thank you for watching.